Oh boy, today is massive. You had the non-farm payroll report. You had the unemployment rate that came out, as well as the ISM manufacturing data, in which there was a lot of good and bad. Overall, the unemployment rate came in much better than expectations. I don't even know how this happened, but it happened. The non-farm payroll report also came in higher than expectations. You would think the markets would drop on this, but there was convincing evidence that maybe that wage price inflation might start to go down a little bit. So we're going to talk about that. We also did get big news out of Tesla, and it dropped the stock massively to a subsequent positive day on the day so far, guys. So we are going to get into all of this key information. Hit that like button and subscribe to the channel. One, if you like Tesla, if you like these kind of videos, or most importantly, if you just like to make some money, guys. So let's get straight into it. Let's not waste your time. We certainly got a lot to cover here in this video. So first things first, we're going to talk about the jobs report specifically and what was really the bullish thing out of this. And we're going to give you guys the stereotypical bearish jobs report right now, because the numbers here, the unemployment rate, bearish. The non-farm payroll numbers, bearish in the typical sense of good news is bad news. These numbers were really good. In 2022, good numbers were bad for the stock market. Now, non-farm payrolls increased 223,000 for the month, above the Dow Jones estimate for 200,000. So again, beating just like the ADP private payroll report. The unemployment rate, get this, I don't even know how this happened, fell to 3.5%, a decline of 0.2 percentage points, and also better than the estimate, guys. I put out in the video last night and said if the unemployment rate fell to 3.5%, the markets would probably fall 2.5 to 3.5%. Those were like my exact words. So as you can tell, I'm pretty shocked on what we're seeing, because the good news didn't really offset the massive beat that we've seen to both of these figures. Now, this is the one bullish thing. Wage growth was below expectations, with average hourly earnings up 4.6% from a year ago, below the 5% estimate. And if we go ahead and take a look at some analyst commentary on this report, it says, quote, all investors care about is that the data suggests inflation is moving towards the Fed's target, said Michael Aaron, chief investment strategist at State Street Global Advisors. Quote, that's all investors care about. An average hourly earnings suggest inflation continues to slow. They are excited about that. Stocks rose again when the ISM's non-manufacturing purchasing managers index showed that the services industry contracted in December, a sign that the Fed's rate hikes may be working to slow down the economy. And this is also pretty big and giving the markets a certain degree of we need to relax, right? We could buy some stocks. Maybe things will be okay. Is because services have really seen a lot of that inflation over the last 4 to 6 months. It hasn't been necessarily in goods. It's been a lot in services, even like dental visits and, just a lot of oddball kind of things. You've seen inflation even hit those areas, which that tends to be more sticky. So you're seeing good news on that front. You are seeing good news as far as the average hourly earnings. The wage growth is not as much, but these numbers were not a big beat at the same time. It's not like the wage numbers came in much better than expectations. That wasn't the case. In addition, wages grew slower than anticipated, increasing 0.3% on the month, where economists expected 0.4%. So we didn't get a big beat. And that's kind of what makes me nervous a little bit about this rally, because now if the Fed really wants to get the unemployment rate higher and to soften the labor market, this just put a huge dent in that. The unemployment rate is now 3.5%, and you just added 223,000 jobs. So we're not even close to contractionary levels yet. We're not even there. We're still gaining and gaining and gaining and gaining every single month, guys. So I would be a little bit weary of the rally that we are seeing, but certainly some good signs in that wage growth sector, as well as just the ISM non-manufacturing PMIs. You are seeing services kind of take a back burner, take a little break on raising prices. Now, let's talk Raphael Bostic. He says Fed needs to stay the course despite lower wage gains. Atlanta Fed President Raphael Bostic said Friday, that's just not a name I feel like you say too much anymore. Raphael Bostic said Friday that December's jobs report doesn't change his view on monetary policy. Quote, we've got to stay the course, Bostic said, adding he expects another quarter or half-point rate hike when the Fed releases its next decision on February 1st. So we're going to get a lot of Fed speakers, guys, and I believe the next one is just here in about 15 minutes time. You're going to get, here is the lineup of Fed speakers. Fed Cook, Fed Bostic, he will actually be speaking twice again at 3:30. Fed Barkin as well at 1:15 p.m. So you still do have two more Fed speakers throughout the day. We'll see if they can move the markets. None of these guys tend to move the markets all too much, and even Bostic saying this really didn't give us a big reaction in the markets at all today. Now, let's get into this Tesla situation. So, Tesla stock, let's first start with the chart on the 1-minute candles, and you can see as soon as pre-market opened, the stock fell from 112, I believe it was around 110, all the way down to about 103 instantly. And you continue to go lower to about $101. And ever since we opened, you did see a little bit of a sell-off. You did not hit a new low. And then you continue to make your way higher. Tesla is definitely showing a lot of resiliency here today. And the interesting thing is, we're getting more concerns about demand. And I think that's very promising in the eyes of investors for Tesla, that even though we're seeing these large institutional investors that have been selling out, retail, like we reported in yesterday's video, didn't buy Tesla as much on Wednesday, not even close to the average of 2022. It seems like people kind of stepped out of the markets because a lot of this demand concern, because after all, Tesla's valuation is all based on demand. You're getting demand concerns today, apparently out of China, and the stock is coming back with a vengeance. So let's get into it, guys. Tesla slashes prices in China, raising demand concerns. Tesla has slashed Model 3 and Model Y prices as much as the equivalent of $7,000 in China, raising demand concerns in the important market. There is some good news, however. The $35,000 Tesla is back. One of the most significant indicators that Tesla is having demand issues is when the automaker decides to reduce prices. Over the last 2 years, Tesla's prices have constantly gone up until October in China, when Tesla reduced the price of its electric vehicle for the first time. Now the automaker is again reducing prices for Model 3 and the Model Y. The two vehicles it produces. I just can't talk, guys. Excuse me. Produces at Gigafactory Shanghai, and the price drop is significant. And you guys can see the percentage change. And this is obviously in Chinese yuan, so I'm not quite sure the conversion ratio. It's roughly the same as America, but you can see the Model 3 dropped by about 13.5%. Model 3 Performance dropped by about 6%. Model Y dropped by about 10%. Model Y LR dropped by about 13.5%, and Model Y Performance dropped by about 10% as well. And the US equivalent, roughly in line, right? Well, actually completely in line, right? Yeah, they're all the same numbers. So you have a $35,000 Tesla again. But nonetheless, that's kind of the concern around Tesla. That's been the big concern over the last couple of weeks, and you're definitely seeing a little bit of that, at least in the pre-market. The stock did sell down, and now the stock is rallying back with a vengeance, and obviously the markets are as well. The S&P 500 is up 1.65%. 1.65%. Nasdaq up more than that. The Dow up a lot, but not quite as much as the SPY. Nasdaq definitely a more risk on kind of day today, and the beats were not that good to wage inflation, guys. And I've said that a couple times, so I really want to stress it, so nobody gets caught off sides here. I don't think this is the end all be all. This is the bullish catalyst that the markets needed. I simply don't think it is that. Now, next week, you are going to start to get bank earnings, and those bank earnings can tell us a lot about the economy. Think about, the banks are the people that manage money. So they're seeing what people are spending their money on. They're seeing, how often people are actually getting loans, what's going in, what's going out of account. So we're going to get a lot of new information next week about the state of the consumer, and I think that will be a little bit more important than the wage price inflation, or essentially wages, going up 0.3% instead of 0.4%. In the grand scope of things, I don't think this is too important, and it wouldn't surprise me. I'm just going to put my hands up for this one. It wouldn't surprise me if the markets closed flat or red today, even though you are seeing so much green across the board. So there is that information, guys. Let's dive into a little bit of the technicals on Tesla. And like I've said over the past really couple of videos now, which is kind of astonishing to me, to be quite honest, is the RSI has remained under 30 since December 16th. We have not crossed above 30. Now, 30 is not bullish by any means. 30 is the lower end band, meaning that anything under 30 is oversold. Anything close to 30 is like pretty bearish, right? You're at your most oversold levels you've ever seen on Tesla stock. It does not get more oversold than this. And typically when you are overbought, like you've seen back here in September and October of 2021, you tend to come back down to reality, right? After a period of time. We were overbought from October 11th until about November 8th. So almost 1 month. And I mean, you're almost half a month right now. By January 16th, you're going to be 1 month in to the RSI being oversold. So statistically speaking, just mathematically charting the stock, you can only be oversold for so long unless the company in question goes bankrupt, and obviously Tesla is not that company. So eventually you are going to see a ferocious bounce in Tesla. So if you are playing puts, if you got bearish exposure on Tesla, you just want to be a little bit careful here. And there's another big catalyst I do want to stress to everyone, which I don't necessarily know when this is going to happen, but I do think it will happen relatively shortly, is that Tesla will step down as CEO of Twitter, and he will focus on Tesla. And I think that produces you alone 20% positive day, 15 to 20% at the bare minimum, and that alone will crush any puts that you guys have on the stock. So if you're up on some of your put positions, I'm not saying you have to sell out right now. I'm not a financial advisor. I'm not your dad. I'm not your uncle. I'm not your brother. I'm not your cousin. I'm nobody, right? I'm a guy working for his, financial advisor status, making YouTube videos. That's it. So listen to me if you want to or don't, but I do strongly feel that is around the corner, and I would not want to have too much put exposure here. I think when the RSI is under 30 and in severely oversold territory for half a month, you probably want to be a buyer of the stock, especially with the quality that you're seeing with Tesla. Forget they're cutting prices in China. China's in a damn recession, right? We should have already known that was coming. When they start to cut prices in the United States, maybe you can raise an ear to that a little bit more, guys. But nonetheless, if you guys can't tell, Tesla severely oversold, ready for that bounce. You have been seeing record volume with the stock day after day, consistently above 150 to 250 million shares trading hands with very low buying activity, guys. You are also back to, August July, September levels with Tesla stock, and even breaking under some of those peaks we've seen, back here in July. So you definitely want to watch. If we fail at this level for whatever reason and we do come down, the next level, guys, the next real support level is not until about $65 to $70. There's not a lot in this range. So that is really going to be all for this video. Not too much else to actually add. We did go over a lot. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. How are you guys trading Tesla? Let me know in that comment section. Thank you guys for watching. Most importantly, enjoy the rest of your days, and I will see you in the next one.